June 17, 2026, buckle up because today's news is unhinged. Quick shout out to today's sponsor, Compete Token, the gaming crypto that actually has real games you can play right now. Link in the description, go check it out. Bitcoin Rodney just folded on a $1.8 billion scam. Florida promoter Rodney Burton pleaded guilty today to running an unlicensed money operation tied to the hyper-fun Ponzi. You know, the one that promised 0.5% to 1% returns every single day with absolutely no mining happening anywhere. 5-year-old me running a lemonade stand had more legitimate operations than this guy. And here's the part that's gonna make you laugh. Rodney pocketed at least $7.8 million for himself and somehow got Jamie Foxx, Rick Ross, Akon, Draymond Green, and Jordan Belfort to help him pitch it. Yeah, the Wolf of Wall Street guy got hired to promote a Ponzi scheme. The casting director on this fraud deserves an award. Sentencing's July 23rd, he's looking at up to 5 years. The Fed's new boss just killed rate cut hopes on day one. Kevin Warsh ran his first meeting today and the Fed held rates at 3.5 to 3.75%, but the real kicker is the new year-end forecast jumped to 3.8%, up from 3.4%. Translation, no cuts coming, no party today, sorry everyone. Bitcoin dipped to 65,300, down about 1% on the day, but still up 5% on the week, so honestly, shrug. Ethereum ripped up to 1763, and Solana absolutely sent it, up 13% to $73. The Fed says no cuts, the market says cool, we'll just pump anyway. Illinois just taxed every single crypto trade. Governor J.D. Pritzker signed the Digital Asset Tax Act today, a flat 0.2% levy on every transaction and every transfer, kicking in January 1st, 2027. The Crypto Council for Innovation is calling it the most punitive crypto tax in the country, and yeah, they're right. Illinois projects $60 million a year in revenue from this. What they don't project is everyone with a wallet immediately moving their addresses to a server in Texas. This is the kind of regulation written by someone who's never opened MetaMask in their life, and it's the first state-level transaction tax in the country. So congrats, Illinois, you're the test case for how to drive an entire industry across state lines. Coinbase wants to be the everything exchange. Yesterday, they unveiled tokenized stocks with real dividend pass-through, options on both crypto and equities, pre-IPO perpetuals, an SEC-registered AI advisor, automated trading agents, a USDC card paying 5% Bitcoin rewards on travel, and Solana staking loans. That's not a product launch, that's a hostile takeover of every financial app on your phone. And Wall Street's eating it up. Benchmark slapped a $270 price target on Coinbase that's 60% above Tuesday's close of $169. The wall between crypto and traditional finance isn't crumbling. Brian Armstrong personally walked over there with a sledgehammer. Congress just tried to pardon-proof Sam Bankman-Fried. Senators Cynthia Lummis and Ruben Gallego, a Republican and a Democrat, which by itself is news, introduced a bipartisan resolution today urging Trump to leave SBF's 25-year sentence exactly where it is. The resolution called the crimes extraordinary in scale, which is congressional speak for this guy stole $8 billion, please don't let him out. The Second Circuit just upheld the conviction earlier this month, and prediction markets are pricing pardon odds in the low single digits, so basically the universe is functioning correctly for once, let's keep it that way. Altcoins just got dumped harder than 2020, $266 billion in net selling on centralized exchanges across altcoins outside Bitcoin and Ethereum, the deepest capitulation in 5 years. That's a lot of bags getting handed off to someone, and that someone is probably tired. But here's the twist. The money isn't leaving crypto, it's just leaving altcoins. Pre-IPO perpetual volume went from $2 million in March to $2 billion in June. That's a 1,000 times jump in 3 months. People aren't selling their alts to go buy bonds, they're selling alts to gamble on SpaceX shares wrapped in a perp. The casino just moved one table over. Mantra got acquired after a 90% token implosion. Data infrastructure firm Invanium announced today they're buying the Mantra blockchain. Yes, that Mantra, the one whose OM token cratered 90% in a matter of hours back in April 2025 and wiped out over $5 billion in market cap. Imagine being the acquirer pitching this deal. We're buying the team that ran the most spectacular blowup of the year. What could go wrong? In fairness, Invanium had already invested $20 million in Mantra last August and launched their Layer 2 on it back in May, so they kind of had to commit. This is what corporate dating looks like. 3 rounds of investment and then a ring. Allbirds quit shoes and became an AI company. The sneaker brand sold off its actual sneaker business and rebranded as Smartbird, now selling AI infrastructure. The stock ripped 52% in a single day to $5.99, up 46% year to date. Apparently, the move was throw away the sustainable wool product line and slap NVIDIA in your investor deck. And get this, the new CEO is Nadia Carlston, former AWS Quantum lead and former Google Sandbox AQ. They also doubled their convertible facility to $100 million to buy AI compute. It's 2026, and the formula for a 50% rally is now delete sneakers, add GPUs. Bull market for pivots, I guess? BitAnswer just reinvented how validators get paid. A new proposal called Root Reborn would scrap the current setup where subnet tokens get automatically dumped every single block, which suppresses every subnet price by design, and instead let validators reinvest their TIO into the subnets they actually believe in. Basically, validators become miniature hedge fund managers, and stakers earn around 17% annually for going along for the ride. And look, the ETH's been quietly holding up. TAO is down 28% over the last 12 months, but Bitcoin's down 38% in the same window. When the AI crypto play outperforms Bitcoin in a drawdown, you stop calling it a meme and start paying attention. Coinbase and CoinFund just bet $32 million on stablecoin rails. Trace Finance closed a $32 million Series A today, led by CoinFund, with Coinbase Ventures, Han Ventures, Jump Capital, and Chainlink Labs all piling in. The platform's already processed over $10 billion in cross-border volume and is expanding from its US-Brazil corridor into all of Latin America, the US, and Asia-Pacific. And here's why everyone's funding stablecoin plumbing right now. Stablecoins did $28 trillion in volume in the first quarter alone. That's 3/4 of all crypto trading. Stablecoins aren't a crypto product anymore, they're just how money moves, and the smart money is buying the pipes. And one more shout out to Compete Token, the gaming crypto with real, actual playable games. Check the description. That's the day in crypto. I'll see you tomorrow.